Guaranty Trust Bank has reported an 8.9 increase in first half earnings per share to R1.73. Now, the Tier 1 bank saw revenue grow 9.4% to 124.2 billion naira, while profit after tax increased 9.1% to 49 billion naira on the back of improved income. Now, the lender declared an interim dividend of 25 kobo per share. Let's now cross to Stanbic IBTC, where Muyiwa Oni, banking analyst, will be giving us some more insight into the numbers. Thank you so much, Muyiwa, for joining us.
And thanks, Esther, for having me.
Well, let's start with what if these numbers are in line with your projections for Guaranty Trust Bank, and how the market received those numbers today.
The GT Bank's results were, I would say, broadly in line with our expectations. EPS was up 9%, like you highlighted, and I would say slightly, it was, and we're estimating a full year EPS of 10%. So I would say the numbers were broadly in line, even though if you look at a few lines, especially around non-interest revenues and even net interest revenues as well, it appears to be tracking below our estimates. But I would say what gives us a lot of comfort is loan growth. Loan growth was up 15% by half year, and we're estimating 17% for full year. So based on the half year numbers, I would say it's quite comforting, and also gives some comfort to net interest income outlook as well, given the traction we've seen in half year. But I would say if you compare to market expectations, it's clear, market seems to be neutral, or I'll say the numbers also seem to be in line with market expectation, especially if you look at the stock price performance. So stock price was up just slightly, about 0.2% or so, and so it really shows that market was, I would say, quite indifferent to the numbers. That's how I put it. And the bank also declared an interim dividend of 25 kobo, which was in line with last year's performance as well. In 2012, the bank declared a dividend of 25 kobo, and I would say over the last 3 years, interim dividend had averaged between 16 and 25% of total dividend paid for the full year. So you could also argue that the interim dividends are not necessarily an indication of what full year dividend would look like, because right now we're forecasting a total dividend for 2013 of R1.60, which is a growth from R1.50 paid last year. But I would say, based on the numbers, a key driver of performance was tax. So tax was down quarter on quarter and year on year, and so it's also clear that in terms of operating performance, the outlook, I would say, based on what we've seen so far, the outlook looks quite, I would say, tough for not just GT Bank, but I would say the sector as a whole, especially if you look at non-interest income performance. So non-interest income was down quarter on quarter, it was down about 26% quarter on quarter, and if the Q2 numbers is replicated in over the next second half of the year, we could see a total decline in non-interest revenues for the bank. And also, if you consider and I would say, obviously, the weak performance seems to be in line with most of the other large banks that release results as well. So Zenith Bank, UBA, we've seen weak non-interest revenue income, and it's also as a result of the CBN revised fees as well. So if you use that as an indication, it will be difficult to see how H2 performance will be stronger than what we've seen so far.
Well, okay, Muyiwa, could you put that in numbers for us, or are you going to review your forecast for GT Bank's earnings for the rest of the year? Of course, to talk about the CRR and the fact that that could put pressure on bank's earnings for the second half of the year. Are you going to review your forecast downwards, or what could the numbers look like?
No, we've actually published numbers showing potential impact of the CRR change on numbers. That's especially if you factor in the potential loss of interest income. And our estimates, based on numbers, we expect to see EPS on average decline by about 5% based on for our banks. And so you could argue that year on year you could see EPS decline across the board for the sector. But I'll say one point to stress is that it really doesn't change the overall outlook for the banking sector, because all these measures are really done to more or less, I would say, put the banking sector on a stronger footing, and it's really making the banks focused on more sustainable ways of generating revenues, focusing banks on areas to attract more sustainable deposits. So shifting banks from public sector as a quick way to mobilize deposits to looking at the real sector. And you'd say also it's also in line with the whole strategy to improve financial inclusion in Nigeria. So for me, I think it really does put the banking sector on a stronger foot. And you could almost argue that it also improves the outlook over the longer term, even though it's clear that in the short term we could see earnings declines.
Now, Guaranty Trust Bank obviously has been one of the most attractive banks on the NSE this year, but looking at the year-to-date performance, it's only up just about 2.8%. Do you think this stock could have done better? And going forward, what kind of numbers in terms of appreciation could we be looking at the end of the next quarter?
We still, so I would say right now, among our picks, GT Bank appears to be one of the most preferred, and it's really because of a couple of reasons. So if you look at its exposure to public sector, it's quite limited. So in terms of, compared to its peers, it's around 10% versus the sector average of 17%. And our estimated earnings loss for GT Bank is around 2 billion naira versus Zenith, where we're estimating about 5.5 billion and 8 billion for First Bank. So it's clear that it's in a better position compared to its peers. And also, if you compare ROEs and ROE outlook versus the overall market average, H1 numbers showed impressive ROEs. ROEs was at 34%. We're forecasting 29% for the full year. And so if you compare that with the sector average of around 20%, it's clear that you should still expect to see a premium over where the sector is trading at. So right now, in terms of price to book, it's around 1.9 times. The sector average is around 0.9 times. And so our view is that this premium will still stay, and in terms of price target, we have a price target of 29 naira 75 kobo for the full year. So we still see reasonable upside around 16% for the full year.
We're going